Well, there are a few messages, but the first one is on the good health of the Spanish economy. Of course, we had just yesterday the release of the WIO from the IMF, and actually Spain was the only advanced economy that saw an upward revision of its forecast. And for the second year in a row, we will be the advanced economy #1 in terms of GDP growth. So that's actually, when you talk about outliers, Spain is a great outlier now in terms of growth. It's also a great place to invest. We've been a hub for investment over the past 6 years. FT data on foreign direct investment between 2018 and 2024, Spain was #5 in the world in terms of new greenfield projects. So that's the main message from the Spanish economy. We're open, we're stable, we're looking forward with a great confidence in our growth model, and so we are expecting even more investments and more trade with our main partners.
And it's very clear that you've been the poster child of recovery after the Eurozone debt crisis. Those are very dark days for your economy, but obviously tourism is one major driver. How diversified is the economy beyond that?
Well, actually, tourism is hitting record numbers. You're completely right. But what we're seeing in the data is that basically now the increase in tourism exports comes not in the months that are summer months, it's shoulder months, before and after summer. So it's a diversification there. Also diversification in terms of being less concentrated on coastal areas, less sun and beach, and more rural tourism, business tourism as well. So it gives an element of sustainability going forward. And it's not just tourism, it's also non-tourism services. We're exporting more in terms of services to firms like IT, accountability services, financial services than we're exporting in terms of tourism. 100 billion with respect to 94, 95 billion. So that's an element of modernization of the Spanish economy. We went out of COVID without scars, and we're taking advantage of the current situation to modernize our economy.
Can I ask you, I know you're not the tourism minister, but can I ask you, a large group of visitors, the biggest one I assume is the Americans. The dollar is currently weaker because everything, the policy measures that have been announced, the loss of trust in the US dollar. And there's a huge transatlantic rift. Do you still expect the Americans to come to Spain?
Well, we want, of course, the Americans to keep coming to Spain. Let's see what the data tells us. We still don't have hard data telling us that there is a drop in terms of revenues coming from US tourists. Let's see what we get as the time goes by this year. But of course, we would expect with a weaker dollar that there will be less US tourists. But I think this will be compensated with tourists from other areas. Euro area tourists will keep on coming, Canadian tourists, which have been also a great source of income over the past few years. So again, we expect this good trend in terms of tourism to keep going for the next few years.
Let's talk about the elephant in the room, and that is the unpredictability of the Trump administration and its policies, both on defense and on tariffs, of course. You spoke to Treasury Secretary Scott Bessent last Tuesday, last week. Is he listening to European concerns?
Well, I think there is an ongoing conversation, and this is the way forward. We need to engage in an open and frank conversation amongst the two sides of the Atlantic, because there's a lot to lose if we do not get into a fair and balanced agreement. I mean, there is this specific figure, which is 4.5 billion euros on a daily basis across the Atlantic in terms of trade in goods and services. That's a treasure that we need to protect. And this is how we face these negotiations from the EU side, with an extended hand to reach an agreement, but it has to be a fair agreement. Let's not forget that under the current situation, most of the tariffs that were imposed by the US administration are already in place and affecting our companies.
Absolutely. He was also pretty critical of you reaching out to China. Can I ask you how you respond to that? Because obviously the Europeans and the Spanish, you have to diversify your trading partners in the light of what's been happening here in Washington. How did you respond to that?
Well, there's a long-term trend. We've been working for the past few years from the EU level to actually engage with the Chinese authorities. They're a competitor, they're a rival in many areas, but they have to be also strategic partners. And that way we'll keep on reducing the big trade deficit that we have with them. We have to engage with the Chinese authorities, open up the Chinese market to EU products, and also attract Chinese investments. We need to do that within the economic security framework that we have in the EU, because the EU needs to be a big, relevant, key player and this new global order that is being redefined. And that means engaging with all major economic powers. Of course, engaging with the US, trying to get to an agreement. They're our main trading partner, but also with the rest of them, including China or including, for example, Mercosur and Latin America. We came to this agreement with Mercosur, and now we want to ratify it. We need to keep on diversifying. We need to keep on finding new trading partners with these free trade agreements like we're trying to do with India, other Asian countries, or also with the Middle East countries. That's the way forward for the EU.
So diversification is the name of the game. In the case of China, of course, the dumping of exports, that is, of course, a huge concern. Can I ask you, the impact on the Spanish economy from the tariffs that you say have already been in place, dumping from China, again, you have a success story to tell the world, but what would the impact be?
So far, I mean, we're of course monitoring on a daily basis whether there is an element of trade deviation from the closure of the US markets and from product coming from China or from other big exporters. We do not see it in the data so far, but we're very vigilant to avoid this element of dumping or trade deviation. And of course, in that sense, it's also key to engage with the Chinese authorities to be able to avoid this sort of detrimental effect of the closure or the fragmentation now related to the US tariffs. And on the big impact for the Spanish economy so far, we look at the analysis from the big services of analysts, and they say it's going to be a moderate impact, but still we are directly less exposed than other countries, but there might be an indirect effect from the impact on other EU countries, or even at the sectoral level, some of them might be heavily affected. So we are already putting in place a network of financial and trade instruments that will help our companies not only somehow diminish or avoid the impact of those tariffs that are already in place, but look for other alternative markets. That's the big effort that we're doing since day one, actually. 12 hours after the President Trump's press conference the 2nd of April, we were already putting in place this safety net for our companies and our workers.
Can I ask you, though, what would it take to restore the trust in the U.S. as a trading partner? Because that comes on the heels of the complete ripping up of the rule book when it comes to defense as well. Can trust be restored?
Well, trust has to come out of a fair and balanced deal. I think that's the way forward, and that's how we're engaging those conversations. We're fully backing the EU on this, the European Commission, because you know it's the European Commissioner who is leading the negotiations for the EU side, and from the Spanish perspective, it's a full backup of the European Commission in these negotiations to be able to reach that fair agreement. That's step one towards, actually, as you said, getting back to this element of trust and confidence going ahead.
I just want to pick you up on defense spending. We know that Spain has a pretty low ratio when it comes to defense spending as part of GDP. Debt is always a concern in some of the countries and the peripheries. Why are you not spending more on defense?
Well, as I told Secretary Bessent also last week, Spain will do its part. We had already a commitment to reach 2%. The commitment was that we would reach that 2% of defense spending with respect to GDP by 2029. And our president said that we would do it beforehand, that we would bring it forward. And actually yesterday he announced it, that we would actually reach this 2% in 2025. So Spain will live up to the challenge and we will do our part. But now it's there is also an element related to the EU defense and security capabilities that we need to discuss amongst the Europeans. It's an element related to increasing our autonomy, our strategic autonomy in terms of security and defense, that would require more spending, that would require EU funding as well, and that's a discussion that we will need to take between our EU partners, to have amongst EU partners, but without, I think this is an important element, without starting that discussion thinking about specific percentages or specific thresholds. I think that's going to be the end point of the discussion. So first is what capabilities are needed, how to fund them, and then naturally we will have a specific financing element, and that's going to naturally lead to a percentage in terms of GDP, and that's going to be the percentage that we will need to have.
So you're not too worried about criticism from the likes of Poland, which is the biggest spender in the EU, towards countries like you who are the weakest spenders. You say in the end it's all going to work out, but do you feel the pressure to spend more?
Well, again, we have increased, brought forward our commitments to reach a 2%. So we somehow went from 1.4, which is the data for 2024, to 2% in basically 1 year. That's a huge investment. That's actually making good on our commitment with respect to NATO. But now within the EU, again, we need to feel that there is an element of European public good in the spending in defense and security. And that element requires EU funding. That's what Spain is putting on the table. We need an EU funding element on security and defense, and at the same time, it should not only be loans. There has to be a grant component. Why? And I come to your point there, because most of this spending will be asymmetric. It will be on eastern countries. Those are the ones that are closer to the threat and the ones that are increasing their defense spending the most. So we need to help them out, and we need an element of solidarity towards those countries, and that's also part of the Spanish proposal.
Is joint borrowing off the table?
No, actually, this is joint borrowing is the EU funding that Spain is putting forward. It's not off the table. But that's
not what I'm hearing from other EU
the
finance
European
ministers.
Commission has already put on the table joint borrowing of 150 billion. So that's already on the table. That will be hopefully in place in the course of the next few months. But what we're saying is that aside from the loans, there needs to be a grant component. That is somehow a concessional element to those countries that will need it the most. We need to help the eastern border countries, the Eastern Europeans, to put in place those big defense and security projects that will benefit the rest of the European countries, including Spain.
When it comes to Europe overall, and my final question here, there's always a sense that Europe rises to the occasion when it's in a crisis. Is this the crisis moment that can elevate Europe to the top?
Well, I think we did not feel this element of crisis before these tariff conflicts. There was, I think, the need to rise to the challenge of competitiveness, increasing productivity with the Letta report, with the Draghi report, but there was no sense of urgency. And now what I can see with my partners, with my peers, is that there is an element of urgency in how fast we have to respond to this threat. And an element which is key there is how fast can Europe get into the next steps of European integration, European single market, European capital market union, and I think there will be significant steps going forward on those specific fronts. When you look at, for example, the potential that comes from really getting to the full scale of the internal market, 450 million consumers, that would be an equivalent to a reduction of 45% in tariffs in terms of goods. That's actually IMF analysis. Or when we look at services,
110.
There you go. So that's the full potential that we need. So a lot of homework to do for European countries, but this sense of urgency is there and will help us.